KKHT wants you to meet three of the classiest guys in real estate.
I am Chris Kelso, the maestro of mortgage.
I am Rob Cook, the godfather of real estate.
And I'm Joe Orsack, the king of credit swing. And together, we're
the Real Estate Rat Pack.
Much like us, real estate right now is smoking hot. So whether it's buying, selling, or owning, you need to check out the Real Estate Rat Pack.
They're here to take your calls and answer your questions live. Call now, 1-800-808-5548. And now, the Real Estate Rat Pack!
Every week, our guests have that same reaction, like, what did I get myself into?
It's either that or we're going to sing all about that bass next time.
It's all about that bass. Well, talk a little bit. We actually, I say we MC the host. We were invited to MC, but Chris Kelso did all the work. Talk a little bit about.
I didn't mean to take over, guys. You guys did a great job there. You supported me. You were there the whole time.
Stood by and watched you work. Yeah, it was awesome.
If we keep it up, the producer's going to be singing "It's All About That Mace."
That's right.
That is true, right? No, I want to give a big shout out and a big thank you to the Teresa Kennedy group out there.
Yeah.
We did a really, really good, a really good ice skating event out there as an event that we did for the Aero Foundation. And you can go check them out, actually, at the Aero Foundation. And it was really good. Brought in families, brought in business partners. We skated. We raised money. We had a good time. We got to see a lot of skaters around Houston perform for us.
Some pretty talented skaters, too.
Very talented skaters out there. And more importantly, we just had a very good time and gave a reward system back to the community for everything that they do for us.
Yeah, it was a great time. Well, I'm pretty excited about the show today. I've been wanting to do this show for 2 years now. We have never done a show about commercial real estate.
We have not done one.
It's a huge piece of our economy here in Houston. And my dear friend, that I don't get to see often enough, is Scott Covington with S.E. Covington Company. And welcome to the show, Scott.
Thanks for having me.
Yeah, absolutely. And you've got a wide background. Talk about how you got in the business, how you started, what you were doing, and
what do you do again?
We're not sure. After we got here, we're really not sure.
What do you tell Stacy that you do every day?
Well, it's been a great career. We just finished our 30th year here in Houston in the commercial real estate.
You started when you were 5.
Yeah, six. But it's been a great career. We primarily have done office leasing, tenant representation, acquisition, disposition. And Houston is on fire, as you know. As you can remember in the mid-'70s when you were here and all the different license plates from all over the country. Well, if you drive anywhere now, you see traffic and you see every plate in the union.
There's traffic in Houston?
Yes.
Well, you have to avoid it, but it is occasionally, yes.
and that's one of the things that you're seeing so much activity out there is we have to meet the demand of all the new businesses coming in. I know there's some statistics out here, and I think Mario may have some later on for us as to how many jobs are being created on a monthly, annual basis. But what are you seeing as far as occupancy like that? Because we judge a lot. I remember starting in commercial that we talked a lot about occupancy. Like, what's our downtown occupancy? It's kind of
Well, I'm not going to give you a whole bunch of stats and figures, but just in your Class A buildings downtown, there are 32 properties, about 27 million square feet, and they're about 8.5% vacant. And
wow.
For all practical reasons, when a building gets to be 95% occupied, it's considered full because they're constantly taking spaces apart, putting them back together. So typically at 95%, you've got little nooks and crannies that haven't been leased or can't be leased. So it's amazing. The average price downtown, if you average all these, somewhere around $42 to $50 a foot.
My.
Wow.
Per square foot on an annual basis. I
remember the days of half that.
Oh, yeah.
And they were making, back in the 80s, you get 1 year free and not have to pay for a year, or they'll space it out that you get equal to a year. And so that's
Absolutely.
all gone.
And that's just downtown. Where are you seeing a lot of the growth happening right now in regards to new lease space?
Well, you can look at one firm downtown is building a brand new tower. It's Hines, and for example, this is the first tower they've ever built, completely spec, where they're coming out of the ground. They don't have a major lead tenant. So that's pretty bullish on the market.
And I would imagine the lender on that had to be pretty confident that it's going to get full, because I know lenders are by nature, and we do have Craig Brothers here later on who's going to talk about commercial lending, but they're typically very conservative, and they want to see a certain percentage of occupancy. Of course, with a name like Gerald Hines behind it, they're probably a little more confident than if it was, Rob Cook.
Right.
I don't know, Rob. I've known you a long time.
I don't know,
Maybe you should try that.
No, I'm thinking I'll leave that to the big boys. So
I want to buy a building.
well, I
How much are those running lately?
Well, they're record prices. They're record prices in Houston, Texas.
Have you been involved with some? I know primarily you started as a leasing firm, but I know you do some sale transactions. What kind of prices are you seeing on like Class A buildings?
You can see upwards of $400 plus a foot. It's amazing, and the dirt prices, like in the Galleria. It's just astounding.
What gives a threat a number?
Oh,
there?
I don't know, $200-$300 a foot.
Oh my!
For dirt, it's
Wow.
Think
some
about
pricey dirt.
how high you have to go to make that pay off. You see the big apartments, the wrap projects that are going up. We don't do any multifamily, but it's amazing to see these go up in the Galleria and all over town.
And of course, they're actually raising old buildings so they can put up new buildings.
Absolutely.
You see a lot of assemblage where they're taking quietly, go there and buying up tracks and then build something and assemble. Because we were, Chris and I were going down Post Oak Boulevard yesterday, and
Yes.
he hadn't been down there a long time. There's like four or five towers. Some of it's residential,
Right.
So it's really interesting to see how they assemble those tracks, and then all of a sudden buildings are coming out of the ground.
Well, it's amazing to see that, just for example, in the Galleria, and we'll just talk about Class A's, but you have about 26 properties, about 12 million square feet total, and they're less than 8% vacant. So
Wow.
you can understand when a tenant comes up to renew. We see tenants coming up and they're getting big bumps, 20-25% increases in their rent, and they're kind of shocked to say, well, wait a minute, I've been here 25 years,
And we thank you for that, by the
Yeah.
way. We appreciate you being here for 25 years.
Where's my discount for being here in this building 25 years? And
Well, there are certain savings by maintaining a tenant because you don't have the cost of rehabilitating the space and moving a new tenant in. But still, they know they can get it.
they know that they can get it. And years ago, when there was a little more vacancy, if you were representing a tenant, they would say, well, tell the landlord we're not going to pay that. We're going to go across the street. We'll move. Well, it's not as many options to move now. It's
Are you finding some of the tenants who may have wanted to be in the Galleria now say, you know what, I'm okay with being a little bit further west or further east or someplace?
Well, what you see in many of these markets is you'll see a tenant in a building say, I'm going to go to a B building. I'm going to move to a B building, and I'll pay basically the same rent, but I'll step down from
And
an A
for all
to a
those
B.
listening, by the way, explain a little bit about the difference between an A building and a B building.
Yeah, what defines that?
Well, it's somewhat subjective, but most of the commercial real estate brokers use a service called CoStar. And the age of the building, the location of the building, the amenities of the building, but primarily the larger buildings in the great locations of the Class A's. And we won't give you any particulars,
Right.
but they can be the same age. Maybe they weren't as large or maintained quite as well, or they might not have a bank or something in the lobby, for example.
Okay.
But you will see, for example, in the Galleria, when things get tight like this, people do sometimes move out of the A's, go into the B's. Well, the B's are many times the ones that profit more than the A's because their
basis is
they're
lower,
filling
too.
up.
Yeah.
That's right. They're filling up, and they're bumping just below the A price. So it's an interesting.
Then you got
supply and
a
demand.
situation like Chris is in. He's on those buildings at the West Sam Houston Tollway and I-10, and they're going to raise those completely.
Absolutely.
And so you're leaving him kind of homeless.
Yes, well,
And,
one
if
of the
you only
things,
had a good tenant rep that could help you.
absolutely.
Find your new
One of the
location.
things that we tell everybody, you made mention the Galleria. I mean, if you now go to the area of Memorial City, all those new buildings that are going up, you have what's going on right now over in City Center. You can start going out west, and everything that's going on from the energy corridor all the way out to the new Mason Park. I mean, a lot of stuff is coming online right now. I
Absolutely.
mean, we have a lot, but a lot more still to come still.
Here's just a kind of an interesting stat for you. In the Galleria Class B buildings, there are 14 properties, about 700,000 square feet. It's about 200,000 vacant, and there are 85 spaces.
Oh, wow.
85 spaces, and that might be a 1,000 square foot space. It might be a 10,000 square foot space. But Class B, Galleria, huge business district, 85 spaces.
Who do you see coming in? Is it just all oil companies? Is it
Oh
mixed?
no, it's a mixture. from soup to nuts. It really is. I mean, yes, we're still the oil capital.
Expensive soup square footage.
The soup square footage. That's the one we're looking for.
Yeah, where are all those nuts going?
That's right. They get into real estate because it's easy, right?
Commercial real estate.
Yeah, it's easy.
We send them to the West Coast.
And now, and I don't know if you can talk about. I know you're working on a
California.
project out in the north part of town, and if you're free to talk about it, I'd like to know what it is, where it is.
Well, we're representing a seller that has about 65 acres on I-45 across from the Exxon new campus. And as we all know, it's another world going on out in the woodlands. Mario will talk about that in a little bit. But it's a city being built out there, and we're seeing people from all over the country. I guess vendors, if you would, that want to be close to Exxon. But
That makes perfect sense.
but you're seeing a new city being built, and obviously the Woodlands, Howard Hughes that owns the Woodlands, is doing very, very well. But it's unbelievable to see what's going on. I think that you're going to see traffic right there on 45 where the Grand Parkway and the Hardy come in look very similar to the Galleria between 59 and I-10.
Yeah, and we actually drove by where the Grand Parkway is coming in. It's going to make a huge difference to that area.
Absolutely.
The mobility and things like that. Even though it's a toll road, I think, if it wasn't a toll road, it wouldn't have gotten built.
Right.
And then we're real clear on it because we've had a lot of discussions on this show about toll roads, and we have some mixed feelings out there. But I think it's going to be a great economic boom, and you have to relieve that congestion. There's so much congestion from cars right now. I don't know where we're going to put them all.
Well, I can tell you we're having more and more meetings using conference calls and conference bridges today than we ever have. And where it's odd because many times when you're sitting through spending large sums of money, people want to sit down, talk about it. But just getting to a meeting, if you're having 5 or 6 people today, many times the client will say, well, let's try to do it on a conference call. It's amazing.
Well, if you can, why not? It makes a whole lot of sense.
I would absolutely agree.
And,
One of the things we tell everybody is, you look in Houston, you see all the diversity that's coming in. We talked about a lot of different businesses. Are you seeing a lot of international business coming in as well, or is it mostly domestics that's relocating, especially because of oil and gas and healthcare, et cetera?
It's international. We're working right now with an international firm to buy an office warehouse and about 2 or 3 acres. It's the second time we've worked with this group and just finished a transaction very similar to it, and they're back doing it again. So we're seeing people come in from all over the country.
I'm loving it.
It's really amazing.
Yeah, you always can say, God bless it, we're in Houston, Texas. Let's face it, it is.
Right.
If it's happening in this country, it's happening here.
I would absolutely
Greatest
agree.
nation on the earth.
Texas. Absolutely the greatest nation.
We call ourselves a state so that we don't offend the other states.
So I talk a little bit about your
Nice
service.
like
I know you do a high level of service to your clients. I know you help them not only locate their space, but you help them figure out how to get things built out and things like that. Talk a little bit about what you do for them.
Well, typically, our industry is many times a transaction-driven industry. The broker's job is to put the deal together, get the project signed, and then go to the next project. We typically try to stay with the tenant through the entire project. We're not in the construction business, but we work with general contractors every day. We work with architects every day. So our industry is somewhat dysfunctional because there are probably 7 or 8 different pieces that go into
real estate is dysfunctional. I'm just totally shocked.
Never heard that before.
And so we try to
You
stay.
heard it here first, folks.
I didn't say I was dysfunctional, did I? But it helps. But we try to stay with the client all the way through to try to not actually do the construction, not do the architectural work, not do the MEP, but to help them understand the process because it is a logistical nightmare, and we just don't leave
MEP
them.
out there for those who don't know, it's mechanical, electrical, and plumbing. So that's what you understand. We use a lot of acronyms in this business, and a lot of times consumers go, "What?" But it's a lot of moving pieces.
It's a lot of moving pieces, and it's money that many times a tenant, especially, doesn't understand, doesn't really want to understand it. They do it maybe 4 or 5 times in their career, depending on if they stay in the same position. So it's a little unique maze. And we try to help them work through the maze, represent their interest.
You do an
Well,
awesome
and
job.
a lot of those moving pieces involve us having to take a break, actually.
I know.
Time flies when you're having fun. The first 15 minutes are away. We still have 45 more minutes to go to talk about some great things going on in Houston. specifically around commercial real estate. Stay tuned. We're taking a break. We'll be right back.
Is that the fact?
Immovable object like me, you can bet as sure as you live. Something's gotta give, something's gotta give, something's gotta give.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we are back. You know, time flies when you're having fun.
Yeah.
Especially when
I'm
you
having a great time.
I always have a great time.
I see Scott over there. He's finally relaxed.
I know.
Like all those stats out, I didn't mess up. So
we know how it goes.
Introduce our next guest, because you've known Craig a long time.
Craig and I go back. We first met on radio a long time ago, actually, over at The Price of Business, actually, who is now actually records in the studio on one of our sister stations with Kevin Price. And, Craig and I always hit it off, had a really good time. Always got back on radio, done a lot of personal business together, and he actually now is with a really good organization. Yeah. Not that he's never been with another organization, but a really good organization right now with Allegiance Bank. How you doing, Craig?
I'm doing well. Thank you, Chris, for having me on.
Hey, we've been talking about this forever. And finally to be able to get
we picked him up
at
like many of our guests. We picked him up at an event somewhere. We were out there, networking and stuff, and ran into him.
That is
we're
true.
Trolling
off the street.
We're out trolling for guests.
Trolling for guests as usual, right there. But
cruising the streets and said, "Hey, that guy looks good."
I'm easy. What can I
say? You heard it here. Craig Brothers is
made
easy.
The producer laugh.
Oh, now. That's not going to come out too well. So.
Craig, one of the things that you and I have talked about, because we've seen, obviously, some major changes from 2008 until 2014. It went from pre-2008, we were just booming. You were at a different bank at that time.
Uh-huh.
And then a lot of changes have happened commercially, finance perspective. And a lot of changes have now happened here recently with a change in the market as well. How have you been seeing everything?
Unbelievable. It really has been, Chris, and to see that 2008 and go through that 2008 and then to, so to speak, rise out of the ashes. I'd really have to credit probably most, if not all, that to the price of oil, which, unfortunately, Houston hates to say that we're not so dependent on that, but we really are.
It's definitely a big influence.
Yes.
Sure.
Oh, it's huge. And now granted, when those prices are going up and, the business is coming in, you get a lot of the ancillary business as well coming in. And I think you see that as well. But truly at the end of the day, we're an oil or energy town.
Absolutely. And one of the things I was going to mention, some of those changes have happened. Nowadays, lending is getting back to a more normalization, isn't it? Commercial lending now where it was in 2008, or actually, I want to say really 2009.
Let's don't go that far, So.
but it's definitely made a comeback from where it was. There was a point in which you and I have talked about this a lot because we exchange leads back and forth, which it was tough.
Oh, well, and it is.
Yeah.
There's and you kind of had you've kind of had a shift. It's gotten easier in some respects, but it's gotten harder due to regulatory concerns. As due to the 2008 crisis, there's a lot more regulatory. The Frank-Dodd Act. There's a lot of there's a lot of other things, like consumer finance laws that have come into place, and a lot of those are they're kicking in every year. There's certain amounts of them that are kicking in. They don't just all start, in 2008 or 2009.
Thank God on that, by the way.
Thank goodness. But it's gotten a lot tougher, and there's a lot more of the consumer protections out there for.
Correct.
There's just a lot more rules and regs that we have to do with our regulators.
Now. I have a company called Improve My Credit USA, and
good. I need to be calling you.
It's kind of a misconception that a lot of folks have that when it's on the commercial side that you don't have to worry about the personal credit and all that sort of thing, which that's a big fallacy.
Yes.
But from my side, I'm dealing with residential. That's 99% of our business is folks connected to some residential real estate, that type of thing. So I'm more familiar with that side for sure. But from a change standpoint on the commercial side, y'all are talking about different regulations and all that sort of thing. What, for our listeners, what is some of the difference that you're seeing regulation-wise, impact-wise?
Well, I mean, when it comes to the consumer, and so I'm going to translate that into doing a house loan or so. Really, I've have to be registered now. I have what they call an NMLS number, so it have to be fingerprinted and have to be background check and so forth.
And you passed it?
God, there were no hits. But
Okay. Chris, you weren't supposed to bring that up.
I don't know why Homeland Security white truck's sitting out in front of the street, but hey,
it's what it is.
But no, it really has, and so from that standpoint, we've seen there's a lot that you can't talk about. There's a lot of those waiting periods as far as an application and having to get back, send back the not confirmation letters. And gosh, I'm losing it off the top of my head, but just there's a lot more that has to be done now. There's a lot more of a schedule that you have kind of like the right of rescission for home equity loans. There's a lot more of that stuff that's in place for just now the home loan process.
Well, on the commercial side also, I mean, I remember in development stuff, I signed corporately, but I always had to sign individually as well.
Yes.
I mean, I had to get them tax return, show deposit, just like anybody else would when they're going. Now, if you're Gerald Hines, they may not ask you for that, but for Rob Cook,
yes, Rob. I'm not the guy dealing with Gerald Hines, unfortunately, and but fortunately as well.
But if he's listening, you're available.
Gerald, I'm available. Give me a call, please. No, but
that's twice he says he's easy. By the way,
but we really kind of focus on the small business guy, and that's where we've always been. That's where we want to be. That's where I like working with, and so in that segment of the we still require the personal guarantee.
Talk about the projects that you finance. I mean, a typical project for you. You said the small ones, the small shopping centers, office buildings,
sure.
Single purpose.
Sure. Well, yes. I mean, that's all going on right now, and what I've been trying to focus on is really do more of the equipment and what they call the C&I, the lines of credit. See a lot of real estate. There's a lot of that going on. I've never been a big, say, mortgage lender. I've not done a lot to that. Just because I haven't really wanted to focus on it.
And he knows a good guy to refer it to anyway.
Yeah, exactly. That's why I have Chris here. I mean, he does it best. Send it to the experts, And so really what I've done, there is a lot of real estate going on out there. I'm a little concerned sometimes about how much is going on and some of the projects that I see. I'm not trying to, raise any red flags. It just, I want to take a little, little pause.
You're a banker, so you're
sure,
conservative by nature, and so
sure.
I know a lot of people, like especially doctors and dentists, and I think Scott could probably attest to this, that they want their own building. They want to be able to have their own destiny.
Sure.
And so, is that something that your bank would
love to do?
Take a deal like that
every day, all day, every day. And yes, those are things that I will do. Owner-occupied buildings. We have no problems doing that.
Are you seeing, in that smaller, I don't want to say smaller business range, but because it's still larger projects, but are you still seeing, strip centers going up? Is there a lot of activity there? Is it more small office building? As far as we're not building a 75-story building, but you know what I mean? The
Joe,
smaller, large projects.
Yeah, no. Good question. I'm seeing both. I've seen a lot of the shopping centers, but I'm also seeing a lot of industrial, commercial projects that are going on. Matter of fact, I'm doing one right now out in the 290 area, and pretty big, and it's a great project, But there again, I get a little when you start seeing a lot of those strip centers, because you saw those right before 2008.
That's kind of why I was asking.
You just kind of start, kind of.
A lot of those are struggling too because of the spending habits of consumers now. A lot of it's online, and so if you're don't have a great, probably a sacrifice a pig that you have it's a big box store or something like that, and you align with it, you're not going to.
Well, there's only so many nail salons and massage parlors, and and everything else that you can have. I mean, we seem to have one on every corner of the street almost.
Yeah, I think some of those. I always thought the great repurpose of that is to make them little medical buildings, because there's all those little neighborhood strip centers that sat there with the dry cleaners and a convenience store, and and maybe one little mom and pop shop type of thing, and those are hard to finance.
Yeah, with the price of oil, I think here in this time right now, I've kind of a little pause for just a little pause. Not a concern, but you kind of you've seen a quarter or a $25, $30 drop in the oil. Price of oil in the last 3 months or since mid-July, somewhere around there. And you have some companies out there that are quick to pull the trigger on projects. You have some that this is just a short-term blip, and they're going to continue. Further. So for me and for a banker who's going to be conservative, you want to kind of you don't want to put on the brakes completely, but you want to just slow down.
Back in the good old days, when I did a project, it was always I would get like 120% of what I needed, and then the appraiser would come in and it would be great. And now they actually want you to have real money in
Yeah,
projects.
can you believe
now.
that?
What's that about?
Well, you have to have your equity in the deal. I mean, we're not.
They want skin in the game.
I know. Well, we're not charging shark loan prices, so we want to see that the client has some skin in the game, and the reason for that is if or let's say if or when or things go bad, it's that you've got a vested interest in getting getting us out of the project. People don't think that we're lending 80-90% of the money on this deal, but we're only getting our small percentage. We're not getting the profits of the business. Now, therefore, we're also not taking the losses if there is one. But if there is a major loss, then the bank's got 80 to 90% of that. And so what we want to know is that if something like that does happen, you're going to be there to help us get out. We're not experts in real estate. We're not experts in getting rid of equipment. Not experts in collecting receivables. And that's where
you sell money.
That's right. That's what we do. We help you build your dreams. I mean, we help you.
Now you handle acquisition as well.
Correct. I'll do mergers, acquisitions. Commercial real estate, you name it.
You don't have to whisper. It's okay. We're proud
of it. She's holding up her hand here. I know how long I've got.
And that is interesting, like you're saying, though. It's one of the things I think sometimes people forget when it comes to lending in general. Is everyone looks at these banks, but at the end of the day, you're absolutely right. I mean, where rates are today,
yes.
Banks have to be even more conservative because of the financial risk associated with it. If it's not that they're lending at 10% and have some flexibility, when you're lending down in those lower percentages, those single-digit percentages, it really increased that risk factor. And the banks right now are just having to look at those type of things.
Well, yeah. I mean, you look at the 10-year Treasury right now. I think it's 233. That's
233. That is correct.
Ended
that was
up the other day, and then of course you got the LIBOR rate. Now we're not a LIBOR type lender, but that's even lower than So you're talking those type of rates can be 2.5%. On different types of credits.
Right.
In ours, you can say 4.5 to 5.5.
Yeah.
So we're really operating on a 1 to 2% margin at the end of the day, and you have a mistake. You may run your profit for the whole year. And
we're operating on a 10-second opportunity to get to a break here pretty soon, I
yes.
think. That was Scott Brothers. We're going to bring him back actually for our fourth segment, but we're going to take a break right now. Stay tuned. We'll be right back.
With room for a couple of cinders and a mouse, a hole and a trap. I don't worry about the flights or count the stairs, 'cause I know someone's there. I take the high and sweeping up.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we're back.
And we did that pretty well, actually.
Yeah.
And so we're in our next segment here, and I got one of my dear friends who I've known probably for 15 years, Mario Arriaga. Welcome to the show, Mario.
Well, thank you, Rob. Glad to be here this morning.
It's been a lot of fun. And I'll give you some background on Mario from when I've known him. He is in our leadership track at Houston Association of Realtors and is going to be installed on the 10th of December as our chairman-elect. So you're
Correct.
coming up into that position, but you've also served as regional vice president for the Texas Association of Realtors, director for National Association of Realtors. I can't, so many things to say, but you were appointed to a board as well. Talk a little bit about
Yes, I'm on one of the advisory members of the Real Estate Research Center at Texas A&M, appointed by Governor Perry.
That's an awesome thing. You get a lot of different, bunch of information on that. So, talk about. I mean, you have been in the banking business. Talk about your early career, how you started, and how you got to where you are today.
Well, that's a long way back, Rob.
That's a long way back. You can even mention John
and go into detail.
Well, actually, this year I have a partner, John, and Ekstrom and I have First Group, and our office is in Conroe, and this is our 40th year in business.
Oh, wow!
So we've seen several cycles in the Houston market, many good, many not so good.
Yeah.
And so we're still fortunate to be able to say that we're still here right now.
Wow.
And right now, as we were talking about earlier, the Houston market, Texas market in general is extremely strong. Houston is just fabulous right now. While we all know that the residential market is a very hot market, we can comfortably say that the commercial market is a hot market.
Hot.
It is very strong right now. So at any rate, we started that about 40 years ago, and we're a general brokerage company. Do pretty much everything related to commercial real estate. We also do some small residential amount of work. Early in the 80s, we were fortunate to decide to get into the banking business.
That's the story I love.
And what we decided to do is, in order to have some local representation, rather than having to go outside the area for decisions on loan requests, we wanted some local involvement. So we were able to form a national bank. We opened a National Bank of Conroe in the early 80s, and ultimately wound up doing some banks in Tomball and Willis and Decker Prairie, and got out of that business in the mid-90s. But it was a good experience because it kind of showed us the other side of the coin in terms of what the lenders actually go through right now.
It gave you a different perspective.
Very different perspective. But anyway, so that has been a great experience.
Well, talk about your scope of your business a little bit. You do a lot of things. I know you represent some of the school districts and acquisitions.
I've represented school districts before in acquisitions. With the growth going on in Houston, school districts are having to look in advance and see where their growth is going to go in terms of residential development and be able to have schools ready to go in that area to meet their needs. So I've been fortunate to do that. And that's, pretty much on the north side of Houston that I've done that. So, I concentrate in the Houston market as well as Montgomery County market. One of the things that we talked about recently was the Grand Parkway, 99. And that segment, Rob, is being built from 290 right now. And segment F1 is going to go to 249. Segment F2 is going to go from 249 to 45, right there in the Woodlands where Exxon is. And then segment G is going to go all the way to 59.
Wow.
And the interesting thing about that is once that Grand Parkway is totally completed in several years, it is over 180 miles in length.
Oh, my goodness. I'm thinking road race.
Yeah, it could be. I mean, it's a long road, but it's opened up a lot of opportunities up in that area, particularly up in, we were talking earlier about the Exxon campus. That is 3 million square feet of space that they're building there, and they are bringing in 10,000 employees to work in that one area. And in addition to that, that's bringing other companies that do business with Exxon, that want to locate near them. So there's a huge ancillary effect in terms of additional growth that's coming.
And of course, for that, people move up there, so you have to have all the services and goods and services.
Absolutely. So it's opening up, a big market. So as the Grand Parkway is built, going west towards Tomball or 290, it's opening up a lot of land there. So you're seeing a lot of developers going out there now, buying tracts to get ready to build residential developments in that area, and even going over to 59, a lot of new growth going over in that area and Highway in 59.
Yeah, I'm thinking when I travel up to Conroe, of course, there's a little bypass on Conroe now, that little toll road that goes around it, but I go up there and look at that. It used to be a sleepy little country town, and now it's growing like a weed. It's
growing like crazy, and of course the Woodlands is not at build-out now, but they're getting there in the next few years, and so the Howard Hughes Corporation, which is the owner of the Woodlands Development Corporation, went out and bought 2,000 acres between Conroe and Willis on the west side of I-45.
I'm not the least bit surprised.
And the surprising thing to me is that reportedly they paid $95 million for that 2,000 acres.
Jeez. So what's that work out per square foot?
It's a little over $1 a square foot for 2,000 acres. So these are the guys that have been doing the Woodlands. They're doing a great job of developing that. and they see what's happening there. They see the growth that's coming up in that area. So they're jumping out to the next leg up and saying, okay, we're going to be ready for the next wave. And between that track and the existing Woodlands development, Johnson Development bought the old Boy Scout camp.
Yeah, we had Johnson Development on 2 weeks
Yep.
ago. We
Yeah.
had Doug Goff on and was talking a little bit about that. It was
So
exciting.
So that's in between the Woodlands, the current Woodlands and the new Howard Hughes track. So, we're fortunate up in the Montgomery County area that we look like we're just going to be poised for just a big push and a lot of growth.
And there's a lot of advantages up there because, Conroe actually has gotten to be quite a city. And, of course, it's got medical and it's got great access to the airport. So, I mean, it really isn't it's a
very nice lake.
Nice lake.
Fabulous
Most of the
Lake
time
Conroe.
when it has water in it.
When it has, right now it does. It's
water
full.
in it.
It's full.
Right now it's not a constant level lake, but it's a lot of people are electing to move those areas, and of course, that's something I'd like to consider. But ultimately, I'd love to be in a lake community and then have good access to medical and stuff.
And in Conroe we've got the airport that's there, and there's an ongoing effort right now to get that airport approved for international flights coming in and out.
What comes in there now?
It just local, but it's not international. So
it'll handle jets, though.
It'll handle jets.
Big jets.
So it used to be an old naval air station.
Okay.
So and they've expanded the runway some. So some good opportunities there that are making that area continue to be attractive.
That area boom quite a bit. Of course, Willis will be the benefit of that. And of course, watching those people buy all you have to do is follow the money, right?
That's true.
Follow the money, see who's buying what, and because those are going to be major developments. The residential will come in first, most likely.
Residential is happening out there. A lot of residential going on. There's I think 5 or 6 new apartment projects planned for the Conroe area. You go out Highway 105 west. A lot of new growth going out there. Some 2 or 3 residential tracts that are being developed out there right now for additional home sites. So that's going to breed more commercial activity, retail, some office, as you said, medical. So just a lot of growth in all quadrants there.
Do you see much multifamily?
There's about 5 or 6 multifamily in that Conroe market right there right now. I think overall in Houston, we did a little presentation at our strategic planning for the Houston Association of Realtors. And right now, there are multifamily. There's under construction of about 23,000 units.
Jeez.
Which is a lot of multifamily.
But if you have a lot of families moving every day into Houston, it's probably going to get filled up pretty quickly.
Yeah, and it's fabulous how much growth is happening there.
We've had some apartment leasing and folks on and just. A really good friend of mine, in fact, they're going to be at my house tomorrow, so I'm sure he'll have more tales about this kind of stuff, but just the cost of housing in the renting inside and all that sort of thing just has skyrocketed. I mean, it's right up there with, purchasing homes. I mean, it really is. And so that's, I'm curious about that side of it, seeing the growth in that 23,000 units. That is mind-boggling.
That's a lot of units.
That's a lot of units.
And there was an article, this morning's Chronicle, I think I saw, where East Downtown, where there's another project that's being announced over there off Navigation near Memphis in that area. So that's a section of Houston that is poised for some really strong growth. So they're looking at putting some units there for all the professionals that want them to be near downtown that can't afford the prices in the heights. But still want to have that proximity.
Which has gotten absolutely crazy. Now, you had some great information that you shared with the HAR about, amount of square footage being built in and around the project, stuff like that. Maybe you can kind of open up that presentation and see if you've got any that you could share.
Nope.
Well, okay, but moving on, folks.
Moving on.
Give me which specific.
I would love to know about the amount of square footage of total. You had commercial buildings. You had some numbers.
Yeah, office space under construction is about 17 million square feet in the greater Houston area. That's a lot of space.
That's a lot of cranes.
And
don't pay attention to the sounds.
Industrial, we're at just under 8 million square feet. And retail about 2.7 million square feet.
That is incredible.
Yeah, it's like I say, we're fortunate to be in Texas and absolutely blessed to be in the Houston market.
Now, you may not be able to answer this question when I ask you. Do you think developers who don't really communicate with each other, everyone's putting new square footage on the ground, and by the time they break the project out and now the developers realize it's happening, are we going to overbuild?
It's happened before, Rob.
Oh, yes, I know.
And it can certainly happen again. Right now our economy is good. I think I saw some recent figures where our job growth year over year through the end of October, those 12-month period was over 120,000. So that's awfully strong numbers. Even if that decreases some based on the oil prices that we talked about, I think it's still going to be a healthy number. But certainly it's a risk that we have to watch. I think there are 6 new office buildings proposed to be built on I-45 in the Woodlands corridor. I doubt all of those get built. I hope all of those don't get built, because then you'll have a glut. Then you could get into
that'll stabilize prices at the same time. But and I'm going to blame lenders a little bit here, because the lenders say, I want to see this in my portfolio. I don't want to see this, and so they sometimes dictate what gets developed out there.
That's true.
They want to see, they like bigger projects because they don't have to go out and replace it with a lot of smaller loans, things like that. So I should got to think up in the air like we have to go on a break pretty soon.
Yeah, I think that's what that meant.
So Mario, before we go on a break, how can people get a hold of you?
Well, they can reach me at my office, and you want a phone number?
You can give them a phone number you want. It's absolutely...
No, that's okay. We don't need to give them a phone, but they can certainly reach me at HAR. They can contact me there, and I'll be glad to talk to them, give them some additional information. So.
Yeah. And Mario has always been a great wealth of information. I always pull him aside when we're going to meetings and say, hey, what's going on? What's going on? Because, it's such a huge impact on what we do.
Yeah,
and people don't want
to... It's all interconnected. Absolutely.
It's all interconnected, because people don't want to move to areas there's not services in an office building like that. So, well, we are coming up against the break here.
We unfortunately, fortunately have sponsors that we have to give some press
when
to.
You are having fun. So
yes.
We will be right back.
And it keeps it out of sight. When that shark bites with his teeth, baby, scarlet billows start to spread. Fancy glows.
Welcome back to the Real Estate Rat Pack Radio Show with Chris, Joe, and Rob. The crew is taking your calls, so dial in at 1-800-808-5548.
And we're back. Time flies when you're having fun.
Yeah. and Chris, welcome back to you.
Thank you very much.
The vacation there.
That is correct. I went on a little 15-minute vacation, unfortunately, right there. My son had to use the John, so or the loo.
It's I'm glad you took care of business and things like that. But anyway, today we're talking commercial, and now this is the time that we open up the mics to talk about what's going on. And actually, Scott, you were bringing up some good points about what you were seeing happening. Expound on that a little bit.
Well, I was just saying that there's a pretty big difference in the negotiation process sometimes between the residential and the commercial. And I know nothing about residential, and some people will tell you I don't know anything about commercial, but I think on residential you can look at the price of what property is selling for. So if somebody's going to buy a home, they can get a realtor and look at the market. In commercial, it's a new ball game on every transaction, because there's no place to go to see what the last price either a tenant paid or a purchaser paid for a tract of land. So it's pretty much a contract negotiation of what a willing buyer will.
It's incumbent on you to go out and kind of ferret out all that information to find out what people are market price and stuff like that. And sometimes they lie to you.
Well, we're in the business every day, so we see what the real deals are. We call it kind of market discovery, because there's really no place to go and say, what did that building sell for? What did that lease space go for? So if you're not doing it every day, there's no place the consumer can go get on the web and say, I'm going to make this offer because that's what the prices are.
Exactly. And because we've talked about this in Texas, it's a non-disclosure state. So, of course, people in commercial don't disclose. And I know it's a big part of contention, because it's kind of opposed to what the Harris County and all the other appraisal districts want. They want to know what you paid for it. Right. So,
well, and you're right. In the residential, you have an MLS, and if you're a member of the MLS, you can see the sales prices. So you know pretty much what you can negotiate, depending on whether you're representing the seller or the buyer. And in the commercial real estate, we have Commercial Gateway in Houston, and we have a listing service there, but all the sales prices are not disclosed. So it's correct. You've got to go out there and study your market, know really what the market is, because you're representing a tenant, and the landlord may be asking one rate, but then you realize, I think you're a little high there, and here's why. So, it's up to you to be apprised of the market and represent your tenant well.
A lot more moving pieces than you were talking about on the break is that, every commercial deal is different. Everyone's different. Unlike, we have a kind of a cookie cutter way we do business, and it varies to some degree based on service and things like that. But every deal, every contract you get, probably if you were dealing in A-class buildings or owners, they have their attorneys drop these contracts, or they'll have a contract that they've used for that building for a long time, and it's not any kind of promulgated form or required to use. And so, we always say this on the show: hire a professional. Somebody who represents you, and of course, Mario, I know.
Well, thank you for that, Rob.
Yes,
that's great.
and Scott, I mean, both of you are just what I consider the consummate professional in the way you do your business. Otherwise, you wouldn't have gotten so much business. I promise you, because people, if you don't do a good job, especially in this, which is, I kind of got out of the commercial side because it's a little more cutthroat too.
Well, and it's the big difference is that residential transaction may take you 6 weeks, 8 weeks to do.
I think Mario
we rarely do it in that period of time.
Oh my gosh! I mean, we can easily we typically work on a transaction for a year.
Exactly.
Very easily a year from start to finish, and we're working with attorneys that are representing the buyer half the time through the project.
Absolutely.
Isn't that fun?
Do you guys?
It really is. I mean, we represent a lot of attorney firms.
Which was a Merchant of Venice, as Shakespeare said first. Let's kill all the attorneys, right? Okay, all attorneys out there, don't call me. I didn't write it.
Yeah, if you want us to change the story, sponsor us.
That's right.
And Craig, how do you handle that from a finance perspective? The fact that some of these deals will go a very long time. I mean, in that engagement process, I can only imagine the things that can possibly change.
Like rates might change.
Not only rates, but also paperwork that's required going into a new year, same year, et cetera. I mean, how are you seeing all those things, and how do you do that?
Well, Chris, in my business, again, as I mentioned, we're doing probably the smaller projects. Those are probably some of the big projects that do take a long time. Also, in addition, we're not really kind of brought in till towards the end, or maybe somewhere in the middle to the end. Now they'll come to us initially and maybe get a pre-approval or just kind of an intent, but we're really not going to be coming into that transaction until later on.
That's sort of funny you mentioned that, because a lot of times what I hear is on the finance side for commercial, it's more of a letter of intent, whereas what we do pre-approvals. So there's some differences.
Exactly right.
Yeah.
Because you are using an attorney, you don't want to spend a lot of attorney times because they say, no, we're not going to do it under these terms and conditions. You write a letter of intent, and both y'all can verify this. This is what my intent is with buying this building. If you say okay, then I'm going to get my attorneys in gear and start drafting up.
And part of the delay, I say delay, part of the reality of the process is you're dealing with municipalities. And permitting process and requirements that they can extend a deal months.
Are you finding it's harder to get permits and things right now?
I am, yes. But they're overloaded. Right. They're overloaded, so it's taking longer. You've got to dial that into your feasibility period, because otherwise you're going to be out of contract.
Do you guys do much work? Now, I know a lot of what we've talked about is large projects. Craig, you've kind of talked about on the smaller side, but there's a lot of investment opportunity in Houston with an exploding market, and there are people out there who've done plenty of residential stuff, but they look at segueing into the commercial multifamily, that kind of stuff. Projects. Do you guys work with folks on that level?
Do somewhat, yes. And what you're also seeing is you're seeing a lot of international clients coming in.
Yeah.
And with the EB-5 visa program, where you invest, I believe it's $500,000 or $1 million.
I think it's $1 million. Yeah.
So there's a lot of those projects in that price range that have garnered the interest of a lot of international investors, and they're able to purchase those. And that helps them in their visa requirements for themselves and their families.
Interesting.
I'm still finding that people are being advised if they're from China or if they're from Syria or wherever they're from, they're still being told come to America to invest, and especially come to Houston.
We're working with a foreign REIT right now that is bringing money to Houston, Texas. And years ago, as we both remember, Mario, the money would go to the West Coast, the East Coast, Chicago, and people said that we weren't stable enough, and I'm talking back in the 80s. They wouldn't put their money here. Money is flowing to Houston from all over the world right now, and they're looking for opportunities.
Yeah, and REIT, of course, is REIT, which is a real estate investment trust, and so they were set up. We've had those around for years and years, and of course, then they had some issues with REITs, and now I think they're back very strong. There's a lot of domestic REITs that's acquiring properties right now. And what are they buying mostly?
REITs are
everything
across the board. They really are.
Anything that's a good investment.
Anything makes sense, right?
You've got shopping center REITs, apartment REITs, office building REITs, industrial REITs. I mean, across the board.
And I'm looking at just thinking of our listening audience here, wanting to capitalize on the market and that sort of thing. Craig, are you working with individuals on commercial, multifamily, smaller range investment opportunity stuff?
Yes, yeah, we are, and we're seeing a lot of the REIT money as well. I mean, you get these projects and you build them and then you turn around and sell them. At the end of the day, there's just a lot of money out there chasing too few deals, and I think that's what's going on. But I am going to be on the smaller segment of that, or the smaller spectrum of that.
But we can fix project. That. You are on the Rat Pack show. Your business isn't going to grow big.
I expect my phone to start heating up here.
Oh, you don't realize on one day it's going to be a new day.
Smoking hot.
Mr. Hines, his number is.
But the question I have, because a lot of times, again, lenders will kind of dictate what they want to see in their portfolios when it gets built. Are we short of anything? I'd heard at one time we were really short on crane serve warehouse out by the ship channel and things like that. Have we caught up with that, or
we're short on concrete primarily?
Oh wow!
Exxon, you'll have to make sure your schedule is right. We were short on drywall. I mean, it's amazing to see the lack of workers, and what we've heard from some of the general contractors is they almost have to guard the work site because
they absolutely do.
One contractor will come up and come up to the workers and say, "We'll pay you $2 more an hour," and they'll literally lay the tools down and leave and go to another job.
That's funny you say that, Scott, because I was just at a client who is a steel fabricator this week, one of my clients, and he said we purposely did not go to Midland, Texas to do projects because they will steal his employees. So he turned down the projects because they're paying, apparently in Midland, Texas, they're paying their McDonald's employees $15 an hour. So
did I just get the 3-minute signal?
We got the 3-minute signal, and one of the things that we're going to do really fast is we're going to do the lightning round, but we're going to have everybody also let us know how we can reach them because we need to give out some numbers on this show, let me tell you that. But one of the things we do in the last 3 minutes, we do a little bit of lightning round. We give you about 30, 45 seconds to let us know what you would like our listeners to leave the show knowing. And then at the end, let us know how we can reach you. We'll start off over here.
Well, the market's strong. I mean, that's the main thing. The market's strong. The commercial market's going to continue to be strong. I think even if the oil prices continue to stay down or drop a little bit more, Houston's going to be fine.
Is there a point where oil drops it won't be fine?
I think that, if it goes below 70, then people start puckering a little bit.
That'll be a new show, won't it?
I think it would be.
Scott,
that'll be the oil pucker show.
Scott, what do you want to leave people with?
Well, we've been working with tenants and landlords for 30 years. We'd just like to say that if you'd like to reach us, you can reach us at our main number at 713-974-7600. We'd love to have the opportunity to introduce ourselves. I'm strong and bullish on Houston. I think we're good even at the current price of oil. So we're still seeing Houston romp and stomp for the next 10 years.
Yeah,
I like it.
And, I know both these guys for a long time. I would have no hesitation in having them represent me in any kind of commercial transaction.
Thank you, Rob. I forgot to give you my contact information.
Yes.
My office is 936-441-1300. Thank you, Rob.
And Craig.
What would you like everybody to leave the show knowing?
Well, guys, I appreciate you having me on, and I'm kind of with Scott and Mario as well. I mean, I'm bullish. I just want to, I want to make sure that, after going through 2008, and as bankers are kind of like elephants, we kind of always remember things, and I think there's so many projects that are going on that hopefully this will. Be just a short-term blip in the price of oil, and those projects are going to go on whether the price of oil is 50 or 150. They're just too far into it, and they're too big a project. So with that being said, I think we'll be good, and I just be cautious.
How can we get a hold of you?
You can call me at 281-517-6420, and guys, I definitely appreciate you having me on.
You know, we tell everybody all the time this is what the show is about. It's bringing on great people, delivering incredible information, and also giving all of our listeners a base out there an opportunity to go and call one of these great individuals about anything you need commercial-wise. We also always like to leave our shows with a good quote, and this is no different. Teresa Kennedy actually sent this over. Again, thank you, Teresa, for such a great event yesterday. It says, when God sees that you are prepared, he will open new doors. I think that is very appropriate. Look us up on Facebook. Also,
be sure to walk through it when he does.
That is correct. realestateratpack.com. We appreciate everybody listening as usual. Until next week, we are out.
And you've been listening to the Real Estate Rat Pack. The question is, who's Frank, who's Sammy, who's Dean, and who's the other guy?
Chris is Frank,
I'm
he's
Dean.
Dean, and I'm Sammy.
Yes, he's Dean. That's right. Yeah.
So tune in to the really big show every Saturday at 9 a.m. right here on 100.7 The Word, KKHT.